Good afternoon, and thank you all for joining us today for the NIN.VC 2016 financial planning call. I am NIN Desai, and I will be your host. Let's start with my background. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with global presence focused on software, communications, semiconductors, and internet and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was amazing to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about 135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company. During my time at Alpha, I realized how inefficient the fundraising process was, not necessarily at Alpha, but in general. We will dig into that a little later during the call, while we discuss crowdfunding and the rationale behind NIN.VC. Most recently, I was awarded 2015 CEO of the Year Illinois for innovation and contribution to the venture capital and private equity industry by Acquisition International magazine. Moving on into the agenda for today's call, which is 2016 financial planning, the market is flooded with a number of investment vehicles, including stocks, bonds, mutual funds, IRAs, real estate, and alternatives like private equity and venture capital, among others. If you're interested in NIN.VC, I bet you have all of the above in your portfolio. But before we get any further, I will pass on the presenter role to Joshua Belangar, who's the president of OptionSizzle. Josh, can you please tell our audience a little bit about yourself, OptionSizzle, your new book, and your outlook of Wall Street and financial planning in general? Thanks, Josh. That was really insightful. It's great to have a three-dimensional portfolio, stocks, bonds, money market. But many people here, how many people here have a four-dimensional portfolio, which is taking a long-term approach and investing in alternatives like venture capital? For example, Harvard and Yale are the biggest and the best performing endowment funds. Their long-term approach and investment in alternatives like venture capital allows them to achieve true diversification and help mitigate the risk involved in having only a stock and bond portfolio. So what does that mean? For example, your traditional portfolio consists of 70% stocks, 20% bonds, 10% money market investment. With the addition of venture capital, your portfolio can now be 60% stocks, 20% bonds, 10% money market, and 10% venture capital investment. The addition of venture capital will not only help you diversify your investment, it will help you mitigate the risk given the inverse correlation between S&P 500 and US Venture Capital Index. Now the question is, why venture capital when you can invest in other asset classes? Historically, if you look at US Venture Capital Index and S&P 500, you will notice US Venture Capital Index tends to outperform S&P 500. And not only that, they have an inverse relationship. However, the basic question is, why early stage technology venture capital? If you notice, from 2002 to 2012, technology investments have dominated the venture capital industry. The highest amount of venture capital funding occurred in the early and expansion stage companies. If you notice, from 2004 to 2013, sector-focused funds have outperformed generalist funds. And technology sector has outperformed the rest of the U.S. venture capital index. With early and expansion stage companies yielding the highest returns. Now a little bit about the fund. What is NIN Ventures Technology Fund? We are a next-generation technology venture capital fund that will invest in Series A and B rounds of disruptive technology companies. We write checks anywhere from 1 to 5 million based on industry, sector, and stage. On April 5, 2012, President Obama signed the Jumpstart Our Business Startup Act, or the JOBS Act, to promote entrepreneurship, create jobs, and in return boost the American economy via crowdfunding. The recent turmoil in the market led to a change in the way businesses was done across all industries, and many startups sprung to life. On the other hand, venture funds that would invest in such startups were on a decline. The traditional sources of funding for a venture fund, that will be pension funds, endowment funds, institutions, etc., were drying up, and that's where the JOBS Act and crowdfunding stepped in. And that's how NIN Ventures came into existence. So what is crowdfunding? Crowdfunding is the practice of funding a project by raising contributions from a large number of people, typically via the internet. NIN Ventures is one of the first funds that is offering its membership interest under the JOBS Act and Regulation D of the U.S. Securities Act of 1933. The offering is being made via general solicitation and general advertising, which is permitted by Rule 506C as contemplated by Title II of the JOBS Act. This rule came into effect September 23, 2013, and we were the first ones to go live with a website and videos about our fund. NIN Ventures also became the first venture fund to be seen on a billboard, which was followed by in-taxi ads and other social media facilitated marketing, including target-based internet marketing. Recently, Wealth and Finance International magazine awarded us as the Best Technology Venture Capital Fund Illinois for the Investment for Alternative Investment Awards 2015 and Best Technology Venture Capital Fund in U.S. for 2015 Fund Awards. Now a little bit about the crowdfunding industry. Crowdfunding has grown from $16 billion in 2014 to an estimated $34 billion in 2015 and is doubling or more every year. The market is flooded with various types of crowdfunding options like donation, reward, lending, equity, royalty, and even hybrid versions. The two most popular types of crowdfunding methods are reward and equity. For rewards-based crowdfunding, entrepreneurs pre-sell a product or service to launch a business, and sometimes even in return for gifts or thank you notes. For example, Pebble Technology Corporation used Kickstarter to raise $10.3 million in order to develop the Pebble smartwatch and pre-sold it to customers. For equity crowdfunding, the backers receive share of a company, usually in exchange of the money pledged. For example, Neil Young used crowdfunder to raise $6 million in order to continue development on Pono Music. In case of NIN.VC, it will be limited partner interest in the NIN Ventures Technology QP Fund. Thanks to crowdfunding, a number of groundbreaking technology companies have come to life. This is especially true in the virtual reality space. Some of the success stories include Oculus Rift, a virtual reality headset, which raised $2.4 million, Avagon's Glimp, a virtual reality headset for electronic devices, which raised $1.5 million, and Secret's Bracelet, a wearable touch projector with 7,000 plus backers. However, there have been considerable amount of companies that have fizzled out, largely due to malfunctioning devices, lack of management, customer service, production hurdles, and follow-up financing, which is very important and something that most new entrepreneurs overlook. Some of the failures include VRS's headset, which raised $100,000, ANTVR's kit, which raised $260,000, and 6sense STEM, a wireless virtual reality motion controller, which raised $600,000. If one can invest in these companies directly, why opt for NIN.VC? What is the difference between direct investing in company using a crowdfunding portal and NIN.VC? Number one, diversification. As a fund, NIN Ventures Technology QP Fund makes multiple investment in companies in different sectors, that is, cloud computing, education software, financial services, etc. During Series A and B financing rounds, this strategy helps diversify the fund's portfolio, which is not the case when one invests in a company directly. Think of it as investing in mutual fund versus stock. Low risk. Given the diverse portfolio, the fund reduces its risk, whereas direct investing in a company exposes that investment to a higher degree of risk. An appropriate analogy would be to put all your eggs in one basket. A logical follow-up argument to that could be, what if one makes multiple direct investment in companies of their choice using a crowdfunding portal versus NIN.VC? Good question. Given 90% of startups fail, even if one invests in several companies via a crowdfunding portal, it becomes solely a numbers game that is quantity over quality. On the other hand, the fund management invests in entrepreneurs because entrepreneurs build company and not the other way around. We, NIN.VC, or any venture fund not only provide adequate financing, including follow-up financing rounds and access to our syndicate partners, but also lend our domain expertise and network of partners to help companies with recruitment, PR, and marketing, and a viable exit strategy. Professional management. Direct investing in a company requires time, expertise, due diligence, constant follow-up, and/or marketing or monitoring. On the other hand, NIN.VC acts like a financial advisor and works for an investor in the fund's best interest. The fund also provides quarterly audited financial statements to the investors on the progress of the fund. Board representation. A $1,000 direct investment in a company using crowdfunding portal does not give an individual enough rights, while as a fund, we take board seats on all our investments. Thus, we are in the loop with the company management when it comes to keeping tabs on the progress of the company and are in a position to help and make suggestions on several occasions, and also in a position to gauge and be a part of the valuation process when it comes to addressing dilution and follow-up financing rounds. Number 5, liquidity at exit. When one invests in the NIN Ventures Technology QP Fund, they are locked in with the fund and the management for a good 10 plus 2 years. Redemptions are extremely rare, and liquidity happens as and when the fund makes an exit in a company via an IPO or M&A transaction. On the other hand, direct investment in a company can be offered in the secondary market for a transfer of ownership, but valuation, timing, and the choice of investment will dictate that transaction. However, now the question is, why NIN Ventures Technology QP Fund, and what is our strategy? Our strategy is to invest in early to growth stage disruptive technology companies. What is disruptive technology company? I get asked this question all the time. A disruptive technology company is an innovation that changes an existing industry and also helps create a new market and value network, displacing an earlier technology or a way of doing business. Every sector at some point is up for disruption. Currently, our focus for 2016 is primarily on virtual reality, cloud computing, financial services, education software, mobile communication, the fourth industrial revolution, among other path-breaking sectors within the United States. Our goal is to invest in the next big trends within these sectors. For example, the fourth industrial revolution. We stand on the brink of a technological revolution that will fundamentally alter the way we live, work, and relate to one another. In its scale, scope, and complexity, the transformation will be unlike anything humankind has experienced before. The first industrial revolution used water and steam power to mechanize production. The second used electronic power to create mass production. The third used electronics and information technology to automate production. Now the fourth industrial revolution is building on the third one which is the digital revolution. It is characterized by a fusion of technologies that is blurring the lines between 3D, 4D, digital, and other smart and biological spheres. NIN Ventures will invest in such path-breaking, early-to-growth stage disruptive technology companies. We will not only provide adequate financing, but will lend our domain expertise and network of partners to help companies with recruitment, PR and marketing, and a viable exit strategy. The strength of our team, the value of our network, and our funding model that's designed to reduce management costs creates this unique investment offering. Not only that, we bring a fresh vision to technology investing, which is the key for working with the next generation entrepreneurs. So who can invest in the fund? Recently, the SEC approved Title III Jobs Act equity crowdfunding for non-accredited investors, which allows any U.S. citizen, regardless of income, to make direct investment via a crowdfunding portal. However, investments in fund like ours is still limited to accredited investor. One must be an accredited investor and verify themselves as an accredited investor before they can invest in NIN.VC. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, any trust with total assets in excess of $5 million qualifies. There are multiple ways to verify if you are an accredited investor. For an individual, it's income, asset, and third-party verification. For entity, it's asset and third-party verification. There are multiple ways to invest in NIN Ventures Technology QP Fund using your checking account, savings account, defined benefit plan, self-directed IRA, and even digital currencies like Bitcoin, Litecoin, and Dogecoin. Now let's go through the investment process step by step in detail. Visit NIN.VC to sign up. Sign up is simple: first name, last name, email, password, and acknowledge you are an accredited investor. Once you sign up, you get access to our marketing materials, that is PPM, investor presentation, and other suggested reading. You get invited to attend our events and calls like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. Once you decide to make an investment, accept the risk and disclosure statement that will explain what venture capital investment is. The next step is to verify accreditation. Once that is in order, it's only a matter of filling out a subscription document and W-9 form on NIN.VC. The last step is payment, and it is as simple as selecting the payment method and the amount you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing the other suggested reading on our website before making any investment decisions. On that note, we're open to questions. Please type your questions in the chat box and we'll make sure we answer them all. Can my accountant verify accreditation? Acceptable verification documents are W-2 or any type of financial statement, and as long as your accountant or financial advisor can verify and issue a letter that they have gone through those statements, it's okay and acceptable for us to qualify you as an accredited investor. Thank you again for being on the call. Sign up on NIN.VC to begin your investment process now, and feel free to reach us at contact@nin.vc or 312-953-0930 to schedule a one-on-one meeting or with any questions or material requests. If you have any specific questions for Josh, please email Josh at josh@optionsizzle.com. Once again, it's josh@optionsizzle.com. Have a wonderful day and happy investing.